but markets are in the green today. So let's shake it out with Pete Mulmat. He's CEO at IG North America. Thanks for joining us today.
Well, it's great to be here. Thanks for having me.
So the U.S. and Canadian markets are hitting record highs. What is behind the bullishness in your mind?
You know, I think it's a combination of things. The rate cut environment, you're seeing Fed funds price in almost, 2.5 full rate cuts. The earnings continue to outperform. The resonant themes we see in stocks, anything to do with AI is still drawing a lot of attention. We're seeing our customers pulled into the same spots. So we're kind of in the bad news is good news, good news is good news. We saw a very soft unemployment number, which led to the movement in Fed rates. We saw a CPI number, which was a little steep, but looked at as there's good pricing power in the market. So we're kind of in that state right now where the uptrend continues to be fueled by and interpreted by any news we're getting in terms of that continuation of trajectory.
Okay, but that being said, is it a broad enough rally for you? We know how much is weighted in tech.
Boy, that's a great question because right now we look at top 10 names in the SPOOs or in the S&P 500 index is accounting for, I think, around 40% of its value. When we looked at the .com bubble, I think the top 10 accounted for 23%. So are we getting to that position where concentration is driving the last leg up here of a bullish run? I've seen that floated a fair amount around, and I think you can look at that concentration as an important inflection point, but I've seen the concentration piece play a little bit longer than anybody thinks. So I'm not inclined to think this is too crowded a space quite yet.
Okay, so Cisco reports after the bell today. What do you think investors should be watching for?
I think with Cisco, it's, again, going back to the networking segment, that will probably matter most. Sales and guidance around AI-related orders will take center stage. They're looking for guidance around, I think, over $2 billion in AI-based sales. That will be the inflection point to see if this stock can continue to move higher or some of the zeal we've had priced in here starts to get taken back out a little bit.
Okay, so let's also get to the recurring theme that you've mentioned for earnings, AI. It's benefiting companies in a number of ways, but one that you pointed out did surprise me, which is Caterpillar. Tell me about that.
Right, and that's actually a very interesting piece of Caterpillar announced adjusted profits that fell, not quite as much as last year. Revenues were awfully soft, but the company cited lower prices and tariffs as the issue. But what was really interesting here was the strength the company reported in power generation sales. So tangential AI, so to speak, what is driving the AI machine? And they had the sales and generators used to power AI was up 28% year over year. So while Caterpillar isn't always the first name you think of when you go to AI, I think its clarity has a little bit of a presence on the power generation side. I think that interesting tie-in too, though, speaks to, are we seeing this AI attribution being overly played through companies we wouldn't think otherwise?
Okay, so accompanying that, we do know AI is being used a lot in retail to target consumers for things that they would likely buy anyway, perhaps. Can we expect a company like Walmart to step up AI spending, especially when they're competing with the likes of Amazon?
I think you are going to see that, and we're going to continue to see, earnings next week. We've got a lot of earnings. I think you'll see Walmart step into the same situation. I think everyone's going to be compelled to leverage the tools that are available to them to be as competitive in the space. So yeah, I think we're going to see the same story continue to play out of some of the big retailers that are going to be reporting. We've got Home Depot, Lowe's, Target. We'll also get the latest retail sales report at the end of the week, which should be interesting. Starting to incorporate a little bit of the back to school sales, which often set the table for Christmas sales at the end of the year. And be mindful of is this tariff, the tariff cost, the knock-on effect, which we haven't seen play through the market, start to show itself a little bit. So it should be an interesting week for earnings.
Let's take a look at some of the stocks your clients have been trading. One of the most bullish is UPS, which is down, but I guess they're anticipating a bump up at some point. Tell me about that.
They are, and you know what? It's down 13% the past month, almost 30% year over year, or year to date, I'm sorry. Our traders tend to be a little bit contrarian. The idea that UPS is, the impact on shipping goods is probably, and the importance of e-commerce continuing to drive business isn't going away. And a stock that's been marked down like this is very interesting to our customers from a contrarian basis.
Tell me about Costco as well.
Costco is a perennial favorite. Everybody loves Costco. I think this is a stock too that on any dip, we tend to see buyers come out as a long-term value hold. So we continue to see these play through. Healthy year-over-year comps at 6.4%, steady growth, and again, heading back into that school season, that holiday season. Our customers tend to lean into stocks like this on any measurable pullback.
Let's talk quickly about one of the bearish stocks, Carnival Cruise Lines. Why is Carnival Cruise Lines in this category? What are your investors seeing?
I think what we're seeing is the other side of the coin, something that's run awfully far, awfully fast. And I think there may be some concerns. Tourism industry, have we booked in? Have we priced in too much growth in here? I think we've seen some pretty substantial drops in occupancy rates in some vacation destinations, and we'll see this play through. And a stock that has so much priced into it recently, traders here are looking, customers are looking for that contrarian play kind of on overvaluation.
Pete, I've got to leave it there. I'm out of time. Pete Mulmat is the CEO at IG North America. Thank you for your time.